What's going on, everyone? It's Marsellis back with another video, and we got to go over Ethereum today. Ethereum is now at $3,200, trying to push that $3,300 point. So Ethereum has so much potential right now. We got a lot of big news here inside of Ethereum. So as you can see, going up on this very steep uptrend, we got out of this whole channel right here. Now we're going on this uptrend. So as you can see now, Ethereum up 4.61% for the last 24 hours, and we're actually up 20.25% for the last 7 days. That's huge. So Ethereum is doing very well right now, $378 million in market cap, catching up to Bitcoin. Every single moment Ethereum is trying to become more dominant than Bitcoin. But as you can see, Bitcoin dominancy is still dominant at 45.2%, and Ethereum dominancy is now at 19.6% right here at the top of the screen. So anyways, let's go over the big news that we have for Ethereum. We have so much stuff going on in Ethereum. So first thing I want to talk about is the Ethereum supply, because the Ethereum supply flips briefly into deflation as gas fees spike. Remember the whole London hard fork thing that just now happened, the EIP 1559. This is so big right now. So anyways, a spike in gas fees and Ethereum burn rates have produced almost 800 deflationary blocks so far. The theoretical deflationary properties on Ethereum's London hard upgrade last week have already been seen in action on the blockchain, with almost 800 deflationary blocks produced. So a spike in the Ethereum transaction fee burn rate has resulted in at least 2 hours when the supply was deflationary. The network has come under heavy load over the past couple of days, which has resulted in a lot more gas being burnt. And remember, the gas fees, this is like transaction fees pretty much. So as of 22 UTC, Ethereum burned bot recorded an instance when 545 ether was burned within an hour period. So with Ethereum insurance reported at 532 Ethereum per hour, it resulted in the asset seeing deflation of minus 13 Ethereum for that brief period. So a larger deflationary burn was detected by Ethereum burn bot a couple hours later, in which 945 tokens were burned within the hour, resulting in a temporary negative issuance of negative 417 ether. It calculated this as an annualized deflation rate of negative 3.12%. So this is the whole breakdown right here. As you can see, 945.1184 Ethereum burned last hour, and that was 7:01 yesterday, 7:01 p.m. So you can see everything that they've said here, and there's a lot of stuff going on in Ethereum. Ethereum is about to be the top finance crypto right now. Like, it's about to be the top. People are making really big money off of Ethereum. Like, I really do believe Ethereum could overthrow Bitcoin in the end, but anytime soon, no. But maybe in the end, it could overthrow Bitcoin, possibly. But anyways, let's keep moving on here. When the amount of Ethereum burned is greater than the mining reward, the deflationary blocks are produced and the supply temporarily decreases. So this has been observed on a tracker from advisor firm Carbono. Sounds like Cardano, right? But it's Carbono, which is currently reporting that there have been 791 deflationary blocks so far, and defines them as blocks where the burned fee exceeded the mined Ethereum. So here's the numbers right here. As you can see, the number of deflationary blocks, the daily count of blocks where the burnt fee exceeded the mined Ethereum. And this is how the chart is looking here. So anyways, when the London hard fork was deployed on Thursday, it introduced the highly anticipated Ethereum improved proposal, which is the EIP 1559 upgrade that adjusted the transaction fee calculation system. Part of the adjustment introduced a mechanism that burns a portion of the base fees collected. So according to Ultrasound Money, which tracks the amount burned, 25,600 Ethereum has been burned at the time of writing. And remember, as if this Ethereum is getting burned, those miners aren't getting that burned Ethereum. They used to get that burned Ethereum, so now miners are making a lot less money. But Ethereum's price is going to be going up, more over time. So are the miners really losing more money? Because if Ethereum is going up more over time and they still have their Ethereum, let's say if they didn't sell all the Ethereum they mined, then their money's going to be going up. But yeah, miners are still losing money here. But anyways, the Ethereum economy is not expected to see sustained deflation until the fee burning is combined with a reduction in block reward issuance, as a result of the merge to proof of stake at some stage in 2022, so next year. The news is not all good for Ethereum users, however, as gas prices have increased again. So according to BitInfo charts, the average transaction price has climbed to $20 from a low of around $4 in July. Ether's gas tracker is reporting as much as $28.60 for a token swap on Uniswap. So from $4 to $20, that's literally a 5x just multiply there. And then the $28 on Uniswap, that's nearly 6x. It's about 5.6, somewhere around there. This is terrible for, you know, the people who are mining on Ether. But anyways, this is going to help Ether's price go up over time. It's going to help Ethereum just skyrocket in price. So hopefully it actually helps Ethereum out in the long run. But anyways, let's move on to the next topic of discussion with Ethereum. So Ethereum scaling solutions are on the rise, but where are the apps? So layer 2 solutions are all the rage among blockchain and cryptocurrency developers as of late. The reason being that much of the potential in the new technology has been hindered by the limitations that are inherent in layer 1 networks such as Bitcoin and Ethereum. These limitations are warranted. Most blockchain networks are preoccupied with providing security and decentralization, which are essential for developers who wish to build on top of these protocols. So in an oft-quoted article, Ethereum founder Vitalik Buterin described the necessary compromise as the scalability trilemma. You can't optimize for security, decentralization, and scalability all at once. You can only optimize for two of these properties at once. Therefore, the solution to this problem has often come in the form of separate chains that are swifter and able to handle more transactions while delegating different degrees of security or decentralization to a layer 1 chain. So solutions such as Polygon and others have indeed become a boon to the growing number of decentralized applications that would be too slow, costly, and cumbersome to operate directly on a network like Ethereum. Most of these applications, however, have not taken advantage of the doors that are opened by greater scalability. The main focus in the space has drifted to DeFi applications such as yield farming, liquidity aggregation, lending platforms, collectibles, and gambling. And also with the yield farming stuff like Shiba Swap, like DeFi apps, they're going crazy right now. All of which have enormous potential to redefine finance, but might be missing the forest for the trees. Most of the issues that have plagued crypto for years have not been tackled by scalable projects yet. Issues such as the difficulty of on-ramping and accessibility for everyday users. Blockchain-based solutions need a new focus, and that is adoption. So Cardano's going hard right now with their whole smart contracts that they're doing. Like, there's a lot of different cryptos coming up inside this space. DeFi is about to be the biggest thing happening right now in crypto. Like, that's literally the new thing. Like, Shiba Swap going crazy. So many different things. We got Farm, which is Harvest Finance, that's going crazy. All this yield farming and stuff. People are getting really big on this type of stuff. You got Glass Token. You got a lot of different stuff out here that is just life-changing for finance. Like, finance is really changing huge. And right now, institutional investors, they're getting on with this. They're going on the new wave. This is the new wave. So definitely continue to watch out for all this stuff happening with Ethereum. There's so much stuff happening in crypto in general, but DeFi is the new wave. But anyways, let's move on to the senator and what's happening here. Or not the senator, but the Senate, which is all the senators. So let's go over that. Anyways, from the Senate's infrastructure bill to Ethereum's major upgrade, 5 key things that happened in crypto this past week. So the first thing, the NFT market is booming right now. I made a previous video not too long ago, probably a few weeks ago, talking about how I didn't really believe in NFTs. I didn't think NFTs would, kind of sustain long-term growth because it just seems weird. Like, anyone can go online. Like, I could take and drag and drop this picture of Shiba Inu onto my desktop, and now boom, I have a free Shiba Inu NFT. But that's not really how it works, because you get like rights to it, right? If you get an NFT, that you have rights to that NFT, and it's yours, you own it and whatever. I don't really know exactly how all this NFT stuff works, but I guess a lot of people are really big with it. Over here it says, over the past week, the market for NFTs or non-fungible tokens surged. OpenSea, one of the largest marketplaces for NFTs, surpassed $428 million in trading volume in the last 7 days alone, according to the App Radar. Within that period, CryptoPunk and Axie Infinity collectibles made up a significant volume of trading, accounting over $134 million and over $220 million respectively. So I guess NFTs are going crazy, go figure. But anyways, next thing, the new SEC chair says the crypto industry needs more investor protection. That's what we need. We need some more protection, but we don't need more regulation. What they mean by protection, they mean regulation. That's what they're saying. So the new U.S. Securities and Exchange Commission, which is the SEC chair Gary Gensler, made headlines last week after sharing his stance on crypto regulation. So he said, while I'm neutral on the technology, even in trades, I'm not neutral about investor protection. So Gensler told Bloomberg on Tuesday, if somebody wants to speculate, that's their choice. But we have a role as a nation to protect those investors against fraud. Now, there's some truth to that, because let's be honest, anyone can make a crypto and rug pull. So if they can put a regulation that makes people not able to rug pull and make scam cryptos, then I guess that's good. But you already know what they're going to do. They're going to overly regulate it. They're not just going to stop there. They're going to do more and more and more to regulate it. So it's like, yes, we do need the fraud to stop, but they're not going to stop at the fraud. And we all know it's going to be like that. But I mean, let me know what you guys think in the comment section. If you think I'm just tripping, if you think that they're not going to overly regulate it, because I truly believe they're going to overly regulate this thing. But anyways, it's crazy. Let's move on to number 3. So Ethereum's major London upgrade went live, and we just now talked about that the EIP 1559, how it's changing gas fees. It's doing some crazy things right now. So anyways, we're going to scroll all the way down here. It aims to change the way transaction fees or gas fees are estimated. Remember, they're burning now instead of really giving that out to the miners. Is going crazy. Currently, users must bid for how much they're willing to pay to have their transaction picked up by a miner, which can be extremely costly. Under EIP 1559, this process will be handled by an automated bidding system with a set fee amount that it fluctuates based on how congested the network is. So another major change under EIP 1559 is that part of every transaction fee will be burned. Remember, part of it went straight to the miners, but now it's being burned or removed from circulation, which will begin to reduce the supply of Ether and potentially boost its price. So EIP 1559 won't lower gas fee prices or the cost of transactions on the network, which can be very high. Instead, it is going to up the price on that. But the upgrade is important since it has the potential to improve Ethereum's user experience, will reduce the supply of Ether, and may boost its price. So go figure, let the miners take the hit, let them take the fall, and then the holders, hopefully they'll benefit off it, right? That's kind of their whole ideal on this. So let's move to the number 4 thing here. Binance.us CEO resigns on Friday. So yes, Brian Brooks has resigned as CEO of Binance.us, the US affiliate of crypto exchange Binance, after 3 months in the role. So yeah, this is him announcing that he's resigned. And there's been a lot of scams or so with Binance, and maybe that's why he's getting out of it. Anyways, greetings, crypto community, blah, blah, blah. I'm resigning. That's what he said. Anyways, this is what he said. Over recently, Binance has been at the center of compliance setbacks and regulatory scrutiny within the US. Probably says why he stepped down. So, anyways, let's move on. It says we're not clear why he stepped down, but we all know why he stepped down. He did not want his name attached to that bull stuff over there. But anyways, number 5, crypto advocates lobby Senate infrastructure bill. So we already talked about this previously, so I'm not going to do too much talking about it. But just know there's a lot of backlash going on right now, and there's a lot going on inside the Senate. Things are going crazy right now. But anyways, Ether trading volumes surpass Bitcoin on Coinbase for the first time as DeFi and staking hype grows. So Ether is now trying to pass Bitcoin. Bitcoin is still more dominant than Ethereum, as you can see here at the top of CoinMarketCap. Bitcoin still is holding that 45.2% dominance over Ethereum at 19.6% dominance. So it's not always going to be dominant. Maybe Ethereum could actually become more dominant than Bitcoin, possibly. But anyways, Ether trading volume surpasses Bitcoins for the first time on Coinbase in the second quarter. A surge in interest in decentralized finance and NFTs, which largely use Ethereum, was a key factor. So DeFi apps and NFTs are really driving that. So Coinbase said the launch of its staking product also drew people to Ether ahead of a key network change. So yeah, the EIP 1559 is really helping out. It's really helping out Ethereum. I should just say London hard fork. It's easier to say than EIP 1559. But yeah, it's really helping Ethereum out inside the long run. But let's move on to the next thing, and that is the NFTs. So NFTs over DeFi. OpenSea just overtook Uniswap on Ethereum usage. So NFTs are really helping out Ethereum here. So anyway, since last year, Uniswap has usually commanded the top spot, but overseas has now demanded that top spot. So non-fungible token marketplace OpenSea topped the leaderboard in gas consumption on the Ethereum blockchain over the past 24 hours in a rare finish ahead of the decentralized finance Uniswap. But anyways, since last year, Uniswap, the largest DeFi, decentralized exchange on Ethereum, has typically commanded the most in daily transaction fees. But now, as you see, OpenSeas is now passing that, and that rhymed. But anyways, if you guys want to support this channel, please, please, please hit that like button, subscribe. It really helps me out for the YouTube algorithm. It really helps me out. So please do that. And if you're liking this video so far, hit the like button and subscribe. And definitely comment in the comment section what you want me to do next. You know, what kind of crypto you want me to talk about next. But the next thing we do want to talk about, 6 reasons why Ethereum has intrinsic value. We're just going to go over the 6 reasons because they're blah, 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 and all the time. Anyways, smart contract capability. But remember, Cardano's trying to combat that. They got their own smart contract thing going. And then a new type of connectivity. We think of Ethereum as infrastructure, one with the potential to revolutionize both finance and technology because they got the DeFi capabilities, they got NFTs, they got smart contracts, they got everything. And then number 3, proof of stake model. So both Bitcoin and Ethereum currently operate using the proof of work consensus. The verification and confirmation of transactions requires a network-wide consensus by miners who are rewarded for processing transactions and executing smart contracts. But now those miners aren't getting those fees all the way. But anyways, Ethereum is currently working towards changing the proof of stake model, changing to a proof of stake model, also tagged as Ethereum 2.0. So once that happens, you know, this is going to be very, very good for Ethereum, and I'm definitely going to be staking that Ethereum. But anyways, speed and scalability. And also, guys, Voyager, you can stake Dogecoin on Voyager, Bitcoin on Voyager. You can stake Ethereum on Voyager. It's not like the normal staking, you know, like you're going to be paying a lot in transaction fees, but still you can stake on Voyager. I had a Voyager link in my description, but I took it out because they have a lot of fees, and I don't want to push people onto the platform. But if you do want to stake things that you otherwise wouldn't be able to stake, Voyager is a good option. But I won't put the link in the description for my link because, you know, we could both get $25 free in Bitcoin, yes, but those fees are gonna take that $25 from you. So invest in Voyager at your own cost. But I do like Voyager. Voyager is pretty good for people who aren't that tech savvy. They don't know much about DeFi exchanges. You know, you just want to put it inside of a regular exchange, you know, a centralized exchange, and pay those high transaction fees inside result of that. But anyways, speed and scalability. You know, Ethereum has speed and scalability. Ethereum is different from Bitcoin as measured by 2 key metrics. Ethereum block times currently stand at between 10 to 15 seconds compared to Bitcoin's 10 minutes. As well, an Ether transaction will show in about 5 minutes, while it takes about Bitcoin 40 minutes for a complete transaction. So Ethereum is way faster, and Ethereum 2.0 will be even faster for transactions. So deflationary supply, Ethereum, you already know the whole London hard fork. So correlation to Bitcoin, the Bitcoin price is a major point in defining the entire cryptocurrency market. I say this in every single video. Everything follows Bitcoin. But over here it says Ether is no longer following Bitcoin's price fluctuations as closely as it once did, but is still following Bitcoin, just not as closely. But anyways, that's all for all of that. Now, crypto analysis unveils massive year-to-end targets for Bitcoin for the bull run. We're just going to look at their little thesis here. This is the Bitcoin thesis, and this was the potential false break that they detected. And they say we could possibly reach 200K by the end of the year. I don't know 100% if that's true or not, but let's just say it could be true. And then this is Ethereum. So this is what they mean by it's not really following Bitcoin that much. We didn't have this potential false break inside of Ethereum back here. Ethereum didn't have that potential false break, but Ethereum is towards the top right now, just like how when Bitcoin was towards the top. And if Bitcoin can actually do that, think about it. This is what Bitcoin would look like going all the way up to 200K. So this is where we're currently at now. And they're saying we could potentially do something like this. And, you know, I have a little drop off here and then just go straight to 200K. Now, will we do that soon? I'm not sure, but they're saying if that happens with Bitcoin, then Ethereum will, in retrospect, do this and then go straight up to $18,000. Now, that is a huge jump from 3,000. But remember what happened earlier on this year. Like, remember, like, everything went crazy and parabolic earlier. So we were all the way back down here in October of 2020 at $200. Like, yes, we can get to 18,000 just like that inside of Ethereum. We can get to 200,000 just like that in Bitcoin. We did it before. Look, October, $200. And then boom, just it's not even a full year. We got like 6 months, and then boom, $4,000, almost $5,000. So there's a lot of potential here. But anyways, Shark Tank's Kevin O'Leary endorsed this idea that Ethereum is on track to become ultrasound money, and this just kind of validates the point that we're going to possibly hit 18K by the end of the year with Ethereum. So guys, this is all that I have for you, ladies and gentlemen. Remember, I'm not a financial advisor. This is not financial advice. I'm not telling you to go buy Ethereum or anything like that. But we all know Ethereum is going to go to the moon, and we know Bitcoin is going to go to the moon. But yeah, it's not financial advice. But yeah, if you like this video though, please support the channel, hit the like button and subscribe, and leave a comment on what you want me to go over next. And if you like this video, and also if you want to support me even more, please check out the links in the description for a free stock with Robinhood, Webull, and Public.com. You can sign up on those and get a free stock and throw your money into Ethereum if you want, but not on Public.com because they don't sell crypto. And yes, hit the like button and subscribe. I'll be back with another video. Peace.